Welcome to the deep dive. Basically, we take different sources, pull out the key bits, the really important stuff, and break it down for you. Today, we're looking at an analysis from the 5 Payuza YouTube channel. They've picked out 5 renewable energy stocks they think have, well, pretty high growth potential for 2025. So the idea is to give you the rundown on these potential opportunities in green energy. It's a fast-growing area, could be interesting if you're thinking about diversifying your portfolio, maybe building some wealth. Okay, let's just get straight to it. First one on their list.
Yeah, and it's interesting. They're targeting 2025 specifically. Suggests they've really looked at, current market trends, maybe regulatory shifts, and how these companies are actually performing right now, plus their immediate plans. It's not just the general renewables buzz. It's like these specific companies might pop soon.
Exactly. And the first company is Adani Green Energy Limited, a really big name. They started up back in 2015, focusing on solar and wind. And get this, by the end of FY24, they were India's largest renewable power producer. We're talking 10.9 gigawatts operational. Plus, they're the world's second largest solar developer overall. That's 18.1 gigawatts total solar capacity. Just gives you a sense of the scale, right?
It really does. I mean, those numbers show just how established they are. Not just in India, but wow, a major global solar player. That kind of position, well, it often helps fuel more growth.
Right. Let's touch on some numbers. Market cap is around 9,074,958 crore. So yeah, definitely one of the heavyweights here. Stock-wise, the 52-week high was 2,741.05. The low was 870.2. TTM EPS is 7.12, and the TTM PE 141.22. Current price when we looked was 377.4. Now, 5 Payuza flagged a few reasons they like Adani Green's potential.
Well, one big thing is they successfully completed a $750 million bond funding. That's key because it helps them deal with existing debt, sure, but also, crucially, supports that massive goal, 45 gigawatts capacity by 2030. Getting that kind of funding, usually signals that investors are pretty confident in their plans.
Absolutely. And they've also launched a new subsidiary, ANIL, that's going to be directly involved in their renewable projects, pushing their clean energy goals forward. And here's a number that really makes you look twice. Motilal Oswal figured out that if you put 10 lakh into Adani Green in 2019, by March 2024, it would have grown to 44.9 crore. That's 118% CAGR, average annual growth.
Yeah, that kind of number definitely grabs your attention. But, and this is really important, past performance isn't, it's never a guarantee for the future. It's impressive, no doubt. But future growth depends on so much: the market overall, regulation changes. Can they actually deliver on those big expansion plans?
Definitely something to keep front of mind. Okay, so second stock, Suzlon Energy Limited. These guys have been in the game since 1995, quite a long track record. They operate in over 17 countries. Their core thing is wind turbines design, manufacturing, maintenance, basically the whole package for wind energy. Their website actually calls them India's largest renewable energy provider.
Suzlon's long presence that gives them deep industry knowledge, established connections, and being international, all that spreads their exposure across different markets, different policies, which can be a plus.
Okay, financials. Market cap is 83,044 crore. The 52-week high for the stock was 86.04, low was 35.0. TTM EPS is 0.70, and the TTM PE ratio 86.97. And the 5-year return on the share price, a pretty significant 139.7%. So why did 5 Payuza pick Suzlon?
Well, a major factor is their recent financial performance. It's improved quite a bit. In Q2 of FY25, their net profit jumped up by 95.72 crore, hitting 102.2 crore. And revenue saw a big lift, too, up 47.6% to 929 gamro. That kind of turnaround suggests, things are clicking, demand is strong.
And didn't they also manage to get almost debt-free? That's got to be a huge positive, right? Less debt usually means more stability.
Absolutely. Cutting down debt gives them way more flexibility. They can invest more easily, maybe handle economic bumps better. It's a very good sign.
Plus, they just locked down a 32.4 milliW wind project in Karnataka. That came through expanding a partnership with Jindal Renewables. Seems like it really shows they still have clout in the wind sector.
Exactly. Winning new projects, especially when it's strengthening ties with existing partners, that shows they're competitive, that the market trusts them and means there's ongoing demand for what they do.
Okay, moving on to number 3, Wary Renewable Technologies Limited. Set up in 1999, part of the bigger Wary Energies Group, their focus is solar power generation and EPC services. EPC, that's engineering, procurement, construction. They handle the whole project lifecycle. They've got a solid record, over 10,000 solar projects done, more than 600 milliW operational capacity. And they seem to push innovation too, like off-grid systems, rooftop solar.
Yeah, Wary specializing in solar and offering that full EPC package, that puts them in a good spot. Solar's obviously growing fast, lots of government support, people wanting cleaner energy, and doing different things like off-grid and rooftop, that just widens their potential market.
Right. Now, the financials here, market cap is listed as 87.95 crore, which admittedly does seem quite low compared to the others we've discussed. Worth maybe double-checking that source figure. But the stock price returns are, well, kind of staggering. Over 3 years, 1760.27%. Over 5 years, 400 and 398%. Huge growth there.
Those returns are definitely eye-popping, suggest massive value increase in recent years. The lower market cap, if it's right, well, maybe it means the market's still figuring them out, or could be other factors investors would want to dig into.
Always do your own homework, for sure. So why did Five Pines highlight Ware Re?
A huge piece of news for them. They recently bagged their largest order ever. It's a 2-gigawatt solar project from Sunbright Renewables 9 Private Limited. That's in Bikaner, Rajasthan. I mean, 2 gigawatts is massive. That's a game changer for their order book. Shows they can handle really big projects.
And like you said, they're riding the wave of government schemes for solar and just generally more demand, creating growth chances for them. Makes sense.
Yes, definitely. With policies pushing solar and that basic shift to cleaner energy, companies like Wari are, well, positioned pretty favorably for expansion.
All right, fourth stock then. KPI Green Energy Limited. Started in 2008 by KPR Infrastructure, became KPI Green Energy in 2022. They're based in Gujarat, their model. Solar power solutions, mainly for industrial and commercial clients. They develop, build, operate the plants, including hybrid ones, maybe solar plus something else.
Focusing specifically on industrial and commercial, that's a big slice of energy use. And offering that full service from development right through to operation, that's a valuable proposition for those kinds of clients.
Portfolio-wise, they've got 171 milliW already energized, producing power, and another 1,261 milliW under development. That suggests a pretty healthy pipeline, right?
Yeah, that ratio, operational versus development, it definitely signals ambition, shows they're actively chasing growth in the renewable space.
Okay, financials. Market cap listed as 102.04 crore. Again, similar to where he seems on the lower side, so maybe verify that. Stock range of the last year. High of 1,453.5, low of 347. TTM EPS is 11.66. TTM PE ratio 43.30. Their ROE, return on equity, is 19.34%. That tells you how well they use shareholder money to make profit. Stock returns have been strong too, 59.6% over the last year, 101.6% over 3 years. So what caught Five Pines' eye about KPI Green?
A key thing is they just got approval for 28.2 milliW across 16 different projects. That's tangible progress. Getting new projects greenlit directly builds their operational base and future revenue potential.
And they've set a really ambitious growth target, haven't they? Like
Yeah.
60-70% growth for this financial year, FY25. And they expect that to continue strong right up to 2030. That's optimistic.
It is optimistic. And while those kinds of targets can mean big returns if they hit them, it also comes with challenges, right? Managing resources, executing perfectly, staying profitable while scaling up that fast. It's definitely something to consider.
Okay, last one on the list, SJVN Limited. This one's got a long history, set up way back in 1988. It was a joint venture, Government of India and Himachal Pradesh. They're a PSU, a public sector undertaking. Mini Ratna Category I and Schedule A under the Ministry of Power. Importantly, they started in hydro but have branched out thermal, wind, and solar too.
Right. SJVN being government-backed, plus having that diverse energy mix, that can offer some stability, potential access to big government projects too, and being in different renewables helps spread the risk. They're not just betting on one horse.
Capacity-wise, they reported 2,377 MW operational by 2024. And they have huge plans, aiming for 25 GJ by 2030 and then a massive 50 GJ by 2040. Talk about long-term vision.
Yeah, those targets are really ambitious, but they line up with the government's big renewables push. SJVN is clearly positioned as a major player in hitting those national goals. Reaching that kind of capacity would be enormous growth.
Let's look at their financials. Market cap, 92,882 crore. Stock high in the past year was 177.50. Low was 88.8. TTM EPS is 2.54. PE ratio 41.04. ROE is 6.47%. Stock returns, 25.17% over 3 years, 29.3% over 5 years. So what were the main reasons 5PASA included SJVN?
One significant development was signing an OU, a Memorandum of Understanding with the Bihar government. It's for a 1,000 milliW pump storage project. These projects are really important for grid stability, basically storing excess renewable power, and this one's expected to create jobs and bring investment into Bihar.
It sounds like a major undertaking with wider benefits. Also, the Rampur hydropower station actually hit its FY25 energy target way ahead of schedule. That suggests good operational efficiency, right?
Definitely. Meeting targets early like that shows they're running things well, they're reliable. That's usually a positive signal for investors.
And they even got an award from the Himachal Pradesh government for energy conservation efforts. So they seem focused on sustainability from different angles.
Yeah, getting recognized for conservation, it highlights a commitment to sustainable practices. That's increasingly important for everyone involved, especially investors looking at the long game for energy companies.
So just to wrap it up quickly, we've looked at these 5 renewable energy stocks highlighted by 5PASA for potential growth in 2025. Adani Green Energy, Suzlon Energy, Wary Renewable Technologies, KPI Green Energy, and SJV Unlimited.
And as we've discussed, yeah, the whole renewable sector is booming, driven by environmental needs, better tech, government support. These 5 companies kind of represent different facets of that growth: big-scale solar and wind, specialized services like EPC, diversified portfolios.
Now, really important to stress this, and the original analysis did too. This is all just for educational purposes. Seriously, before you even think about investing in any stocks, you absolutely must do your own deep research. Think hard about your risk tolerance. How much risk are you actually okay with, and what are your specific investment goals?
Couldn't agree more. What we talked about today is based on that 5 PISA analysis. It's an overview. It is not financial advice. You've got to do your own homework. Due diligence is critical.
So as we finish this deep dive, it does make you think, where is all this heading? What role will these companies and others like them actually play in shaping a more sustainable future? And maybe what opportunities could that open up for you now that you're, well, a bit more informed? Definitely some food for thought. Thanks for tuning in.